Have you ever wondered why some ordinary American cities suddenly become real estate gold mines, while everyone else is still looking at famous places like Miami, Austin, or Los Angeles? History has shown that the biggest fortunes in real estate are often made before a city becomes nationally famous, not after. Years ago, very few people believed cities like Nashville, Boise, or Tampa would experience explosive housing growth. Yet early buyers saw their home values rise dramatically over time. Now, many market analysts believe another wave of hidden American cities could be preparing for a similar transformation. These aren't necessarily the biggest cities or the ones making daily headlines. Instead, they're quietly attracting new residents, high-paying jobs, major infrastructure investments, and businesses searching for lower costs. In today's video, we're exploring some of the hidden U.S. cities where home prices could potentially experience significant long-term growth if current trends continue. We'll examine the economic forces driving these markets, why investors are paying close attention, and what risks buyers should also consider before making any decisions. By the end of this video, you may discover locations that could shape the next chapter of America's housing market. The American housing market has entered one of its most fascinating periods in decades. After years of rapid appreciation, followed by higher mortgage rates and slower sales, many people assumed the era of strong home price growth had come to an end. But experienced investors understand that national headlines rarely tell the complete story. Real estate is ultimately local. While some expensive metropolitan areas are struggling with affordability, other smaller cities are quietly building the foundations for future expansion. Population migration, new manufacturing plants, technology companies, transportation projects, and changing work habits are creating opportunities in places that many Americans have never seriously considered. Instead of chasing yesterday's hottest markets, many investors are now asking a different question. Where will tomorrow's hottest markets be? One of the biggest trends reshaping America is domestic migration. Millions of people have been moving away from high-cost coastal markets in search of lower taxes, affordable housing, better quality of life, and stronger employment opportunities. This movement isn't temporary. Remote work has given many professionals the freedom to choose where they live rather than staying close to corporate headquarters. At the same time, companies themselves are relocating operations to states offering business-friendly environments and lower operating costs. Every new employer creates additional demand for housing, retail stores, schools, restaurants, healthcare facilities, and supporting businesses. As employment expands, housing demand often follows. Another important factor is affordability. Cities where home prices remain relatively reasonable still have room for future appreciation if local economies continue improving. In many expensive markets, affordability has become a major barrier, limiting how much prices can continue rising. However, in emerging cities where incomes are growing faster than home prices, buyers may still find opportunities. This balance between income growth and housing costs often becomes one of the strongest indicators of sustainable appreciation rather than speculative price spikes. Infrastructure investment also plays a surprisingly important role. Major highway expansions, airport improvements, manufacturing facilities, technology campuses, hospitals, universities, and logistics centers can transform an entire regional economy over several years. These projects create thousands of construction jobs initially, followed by permanent employment opportunities after completion. As more workers arrive, rental demand increases, vacancy rates decline, and developers begin building new neighborhoods. Over time, these improvements can reshape both the local economy and the housing market. Of course, predicting future home prices is never an exact science. Every market carries risks, including economic slowdowns, changing interest rates, unexpected oversupply, or declining job growth. That's why successful investors focus on long-term fundamentals rather than short-term excitement. They study employment trends, wage growth, population increases, housing inventory, and local government development plans before making investment decisions. The cities we'll discuss aren't guaranteed to double in value, but they share many characteristics that have historically appeared before periods of strong housing appreciation. In the next section, we'll begin exploring the first hidden American city that has quietly become one of the most closely watched real estate markets in the country. The first city that deserves serious attention is Huntsville, Alabama. At first glance, Huntsville may not seem like the kind of place that could become a real estate hotspot, but a closer look tells a very different story. Over the past decade, Huntsville has quietly transformed into one of America's fastest-growing technology and aerospace centers. The city is home to major defense contractors, advanced manufacturing companies, engineering firms, and a highly educated workforce. Its connection to the U.S. space industry has helped create thousands of high-paying jobs, while new private investments continue to attract talented workers from across the country. Unlike many famous tech hubs, Huntsville still offers housing prices that remain relatively affordable compared to local incomes. That combination of strong employment growth and reasonable home values has made many long-term investors optimistic about the city's future. If job creation continues and housing supply struggles to keep pace with demand, property values could continue climbing over the coming years. Another city gaining attention is Chattanooga, Tennessee. Once known mainly as an industrial center, Chattanooga has reinvented itself into a modern city that combines outdoor living, technology startups, and growing business investment. One of its biggest advantages has been the development of high-speed internet infrastructure, which attracted entrepreneurs and remote workers long before remote work became common nationwide. Today, young professionals are moving to Chattanooga because they can enjoy a lower cost of living without sacrificing career opportunities. Local businesses, restaurants, entertainment districts, and waterfront developments have created a lifestyle that appeals to both families and young workers. As more residents relocate from expensive metropolitan areas, demand for housing continues to grow, placing additional pressure on available inventory. Next comes Boise's neighboring competitor that many investors now discuss, Idaho Falls, Idaho. While Boise experienced enormous appreciation during the previous housing boom, rising prices pushed many buyers towards smaller nearby markets. Idaho Falls has benefited from this trend by offering more affordable housing while maintaining access to employment opportunities, outdoor recreation, and a high quality of life. Population growth has steadily increased, new residential communities continue expanding, and local businesses have invested heavily in supporting infrastructure. Although no market grows forever, cities like Idaho Falls demonstrate how secondary markets often benefit when larger cities become too expensive for average buyers. Another hidden opportunity may be found in Greenville, South Carolina. For years, Greenville quietly invested in its downtown transportation system, parks, and business environment. Those investments have paid off by attracting manufacturers, healthcare companies, financial services, and advanced technology employers. International companies have expanded operations throughout the region, creating thousands of stable jobs. Families relocating from larger metropolitan areas often discover that Greenville offers excellent schools, a growing economy, attractive neighborhoods, and significantly lower living costs than many major East Coast cities. These factors continue supporting demand for both owner-occupied homes and rental properties. Investors often view Greenville as a market with balanced long-term fundamentals rather than short-term speculation. One city that often surprises analysts is Northwest Arkansas, particularly the rapidly growing communities surrounding Bentonville and Rogers. This region has become one of the strongest economic success stories in the United States. Large corporate employers, expanding healthcare systems, educational institutions, and continuous infrastructure investments have fueled impressive population growth. New restaurants, cultural attractions, biking trails, and entertainment venues have transformed the area into a destination for professionals seeking both career opportunities and quality of life. As more workers relocate to the region, housing demand has consistently remained strong despite nationwide market uncertainty. Developers continue building new homes, yet demand frequently keeps pace with new construction, limiting excess inventory. Another market worth watching is Spokane, Washington. While Seattle became one of America's most expensive housing markets, many buyers began searching for more affordable alternatives within the Pacific Northwest. Spokane benefited from that migration as remote workers discovered they could enjoy lower housing costs while remaining connected to larger regional economies. Healthcare, education, logistics, and manufacturing provide stable employment, while continued population growth supports housing demand. Although price growth has slowed compared with the rapid increases seen during the pandemic years, many analysts believe Spokane still possesses long-term strengths because of its diversified economy and relative affordability compared to coastal Washington cities. One common pattern connects nearly all of these cities. They are not relying on a single boom or temporary trend. Instead, they are gradually building stronger economies through job creation, infrastructure investment, business expansion, educational institutions, and population growth. These are exactly the kinds of long-term fundamentals that historically support healthier housing markets. However, smart investors understand that no city is guaranteed to outperform forever. Rising interest rates, economic recessions, policy changes, or excessive new construction could slow appreciation in any market. The goal is not to predict the future with certainty, but to identify locations where multiple positive trends appear to be working together. In the final part of this video, we'll examine several more overlooked American cities, discuss the biggest risks facing today's housing market, and reveal what experienced real estate investors look for before buying property in markets with long-term growth potential. As we continue exploring America's overlooked housing markets, another city attracting growing attention is Fayetteville, North Carolina. While it has long been associated with military activity, the local economy has become increasingly diversified through healthcare, education, logistics, and small business development. Steady population growth and relatively affordable housing continue to draw first-time buyers and long-term investors who are priced out of larger metropolitan areas. Although Fayetteville may never generate the headlines of cities like Austin or Miami, consistent demand and stable employment can create the kind of slow, sustainable appreciation that many experienced investors prefer over short-lived housing booms. Another market worth watching is Columbus, Georgia. Positioned near important transportation corridors and supported by manufacturing, healthcare, education, and defense-related industries, the city has quietly expanded its economic base over the past several years. Affordable home prices remain one of its strongest advantages, especially for buyers looking for markets with room to grow. As businesses continue investing in the region and more families search for lower-cost alternatives to expensive metro areas, demand for housing could continue strengthening over the long term. One of the most interesting trends shaping the next decade is the rise of smaller regional cities instead of only massive metropolitan areas. For decades, many Americans believed career success required living in places like New York, Los Angeles, or San Francisco. Today, that assumption is changing. Improvements in technology, flexible work arrangements, expanding regional economies, and lower living costs are encouraging people to settle in cities that offer a better balance between income, affordability, and quality of life. This shift has created opportunities in markets that were largely overlooked only a few years ago. But it's equally important to understand the risks. Real estate does not move in a straight line. Mortgage rates influence affordability, and higher borrowing costs can reduce the number of qualified buyers. Economic slowdowns may weaken job creation, while rapid new construction can increase housing supply and limit future price growth. Local policies, insurance costs, property taxes, and infrastructure challenges also affect long-term market performance. A city with strong potential today may face unexpected obstacles tomorrow. That's why successful investors avoid making decisions based solely on exciting headlines or viral social media claims. Instead, experienced buyers usually focus on several key indicators before investing. They examine whether the local population is growing steadily, whether employers are creating well-paying jobs, whether incomes are increasing, whether housing inventory remains balanced, and whether major infrastructure or commercial projects are planned for the future. They also study rental demand, vacancy rates, and long-term economic diversification rather than relying on one industry alone. Cities with multiple sources of economic growth often prove more resilient during downturns than those dependent on a single employer or sector. Perhaps the biggest lesson from previous housing cycles is that the best opportunities are often recognized before they become obvious to everyone else. Years before cities like Nashville, Tampa, Raleigh, and Boise became household names in real estate conversations, they were simply growing communities with improving economies, rising populations, and expanding job markets. Early buyers who understood those long-term fundamentals often benefited the most. That doesn't mean every emerging city will follow the same path, but history shows that patient, informed investing has consistently outperformed chasing markets after prices have already skyrocketed. So, could the hidden cities we've discussed eventually see home prices double? The honest answer is that no one can guarantee it. Housing markets are influenced by interest rates, economic conditions, government policies, and countless local factors that constantly evolve. However, these cities share many of the characteristics that have historically supported strong long-term appreciation: growing populations, expanding employment opportunities, improving infrastructure, and housing markets that remain more affordable than many of America's largest metropolitan areas. For buyers, homeowners, and investors willing to research carefully and think beyond today's headlines, these markets may offer opportunities worth watching over the next decade. The future of American real estate may not be written in the country's most famous cities. It may be unfolding quietly in communities where new businesses are opening, families are relocating, infrastructure is expanding, and local economies are becoming stronger year after year. Those who pay attention to these trends before they become mainstream may be better positioned to benefit from the next chapter of the housing market. If you enjoyed this analysis, let us know which hidden U.S. city you believe has the greatest long-term potential and why. Don't forget to like this video, subscribe for more in-depth real estate insights, and turn on notifications so you never miss our next analysis of the trends shaping America's housing market. Thanks for watching, and we'll see you in the next video.